All right, let's break down the latest earnings call from Silicon Motion, ticker SIMO. Now, this was one of those quarters that really makes you lean in, because the headline numbers told one story, but the way the market reacted, well, that was a completely different story, and a much more interesting one. So let's get right into it.
So check this out. This is the puzzle at the heart of the whole thing. On one hand, Silicon Motion technically missed their adjusted earnings per share target. Just by a few pennies, but still, a miss is a miss. Normally, you'd see a stock get punished for that, but instead, the stock just exploded. It shot up nearly 9% in pre-market trading. So what on earth is going on? What did Wall Street see that made a miss look like a massive win?
The answer, when you dig in, is actually pretty simple. Everyone was looking forward, not backward. The market completely blew past that minor earnings miss because management spun a really powerful, really compelling story about future growth. They basically made this quarter's results feel like ancient history.
And it all started right here with the guidance. They're forecasting 5 to 10% sequential growth for the first quarter. Now, to put that in perspective, Q1 is usually a slow, kind of sluggish period for them. So for them to guide up this strongly, that was a huge signal to investors that the growth engine isn't just starting, it's accelerating. Big time.
And they were crystal clear about where all this new growth is coming from. They didn't just throw out big numbers. They tied them directly to the single biggest trend in technology, maybe in the entire economy right now, AI. They're talking about the massive build-out of data centers and AI infrastructure, and they're positioning themselves as a go-to supplier for this absolute tidal wave of spending.
The star of this whole strategy? It's a product called MonTitan. And look, this isn't just some minor product update. This is their big strategic play. It's their golden ticket into the high-margin, high-growth enterprise data center market. These are the controllers specifically built to handle the insane demands of AI.
And this isn't some flash in the pan. You have to look at the roadmap, because this is the long-term story that investors are really buying into. The ramp-up begins in the second half of this year, and they're already targeting for it to be 5 to 10% of total revenue by the end of the year. That's fast, but the story goes on for years. A new, more powerful version is getting its design locked in, and they're expecting major wins with the biggest customers to really kick into high gear in 2028. You see, this is a multi-year structural story.
Okay, so with all that excitement about the future in mind, let's just quickly circle back and look at the actual numbers that just came out, the ones that set the stage for this whole thing.
And here's the key takeaway. Yes, there was that tiny miss on the adjusted earnings line that we talked about, but look at everything else. Revenue smashed expectations by over $17 million, and maybe more importantly, gross margins expanded in a big way year over year. The business is fundamentally strong, and that's what gave management the credibility to paint such a rosy picture of the future.
Of course, a plan this big is never a straight shot to the moon. It's never that easy. So let's get real and talk about the key things that could push the stock even higher and the risks that could trip them up along the way.
So, on the bright side, what are the green flags we're watching for? Well, all eyes are on MonTitan, obviously. Any updates on its progress will be huge. We also need to see them actually deliver on that sequential growth, quarter after quarter. And then there's other stuff, like gaining traction in related markets, or hearing them keep talking about 2026 being a record revenue year. That language matters.
But on the flip side, there are definitely some headwinds. Management themselves talked about supply chains for key components getting tight, which can squeeze them on price. A roadmap this ambitious carries a ton of execution risk. They have to actually pull it off. And some of their new solutions might actually put pressure on their profit margins. So, it's a balancing act.
So when you put all of that together, the good, the bad, the future story, what's our final take? Here's the next call and what we think it all means.
We're coming out with an outperform rating. It's pretty straightforward, really. We think the market has sniffed out the big pivot here. Silicon Motion is making this incredible transition from being just another consumer-focused company that goes up and down with the cycles to being a core structural winner in the AI build-out. That new narrative is real, and it's here to stay.
So that's our rating. But what about the trade? If we had to walk into an investment committee meeting right now, what's our outrageous but plausible idea for how to play this?
Okay, here's the three-step play. First, the thesis. The AI story is now baked into the price. It's all about execution from here on out. Second, our prediction. We think they're going to come out and meet or even beat the high end of their own guidance for Q1, which will just add more fuel to the fire. And third, the trade itself. You go long the stock to ride that wave. But you protect yourself. You use out-of-the-money puts, which are basically like buying some cheap insurance, to hedge your bet in case they stumble on the roadmap or the whole sector takes a hit.
And as always, we've got to say it, this is our analysis. It is absolutely not financial advice. You should always talk to a professional before making any investment decisions for yourself.